So that's all right. Um, Euro Swiss. It says here the sharp sell-off in global equity markets and a search for a non-dollar safe haven has seen the Swiss franc perform very well. The Swiss National Bank faces the twin challenges of reluctantly cutting the policy rate to zero when it meets in June, and B, facing constraints on FX intervention. So it says one of the reasons the Swiss may be doing so well is the intervention story. Washington's key call for trade partners is to stop preventing your currencies from appreciating. Um, Switzerland briefly faced a 31% reciprocal tariff and could be bounced back if it undertakes persistent FX intervention. We see downside risks in the second quarter if risk assets remain vulnerable. Yeah, I think the Swiss franc is going to be a very good sell if risk on comes back on, right, or less risk off, because ultimately the Swiss franc is very expensive. You can see that here. Right, overall, the Swiss franc. Oh, sorry, it's the New Zealand dollar. Swiss franc. Here we are. Swiss franc, very expensive. Yeah, it's moved up. Um, and basically, in the I've written it in here. Matter of fact, it says here the torrent of cash flowing into the Swiss franc is fueling speculation that the central bank will be forced to intervene or even cut interest rates into negative territory to control the currency's gains. The gains are the last thing that SNB want to see, especially against the euro, says Simon Harvey, senior macroeconomist economist at Lugano-based LB Macro. If the franc appreciates much further, it could present the SNB with two unpalatable options: intervene in the currency market and run the risk of earning Trump's ire, or cut interest rates to below zero and return to a controversial policy that warped markets for years the last time around. Market participants are starting to flag as the currency may be getting too strong for the SNB's liking because of the danger that it could depress import costs enough to pose deflationary risks to the economy, right? And when you look at where inflation is, remember they want 2% inflation. So when you look at inflation rate, it's at 0.3. Month for month was at zero. So if you start to have negative inflation, right, which is actually again with the Japan, but if you start to get it overall in terms of overall inflation rate, then in fact that is considered deflation. Deflation is considered very expensive, an appreciating currency, and it has all sorts of problems. And remember, they want their target needs to be around 2%, right? It needs to be around that 2% target, like everyone else's, or pretty much, the majority of other currencies are, apart from the Japanese yen, of course. So ultimately, the Swiss franc have a problem on their hands. So the more it appreciates, is the more this is likely to turn negative. And if you've noticed, if you can see this on a chart, and in fact, I'll go to inflation rate. What you'll see inflation, right, is heading towards basically this is going down. So this is getting more and more expensive, right? I know it's counter intuitive, but that's basically what it means, right? So it's becoming more and more of an expensive currency. And at the same time, so that was from May, July, September. So that was all from last year, right? So May, July, September, November into 2025. Yeah. Now, at the same time, if you go to the Swiss franc currency from last year, look what's been happening. From May, yeah, you've seen prices move to the upside. So it's correlated, right? An expensive Swiss franc is causing inflation to move to the downside. Yeah. And in fact, the Swiss National Bank want the opposite. They don't want that to happen. In fact, they want this to happen. So that's why they're talking about intervening, right, to try to get their currency to move to the downside or to cut rates. So when we look at interest rates for the Swiss franc, which is down here, yeah, you can see the market pricing in negative rates, right? You can see it pricing in the negative rates. That was last week. Now this is this week. Negative rates. See it here. So it all makes sense, right? And you can see this happening as long as you know the rules, yeah, to the game. It's just a case of, all right, will then price follow, right? I've been saying this for obviously for quite a few weeks that, of course, the Swiss franc, is going to have problems, but to make money off it is just the timing of when that happens. So Mark says the carry trade will come back if risk comes back on. Swiss is only 0.25 interest rates. Absolutely. Swiss yen looking nice. And it is. It really is. That's the reason why I've kind of kept it as a sell. I know a lot of traders have been like, well, why is the Swiss franc rising against the Japanese yen? And I understand that in the short term. But ultimately, I think that if things start to turn around, and they eventually will, right? Everything always gets priced in. Just think about from COVID that eventually got priced in, and price, eventually found, a high and a low. The Russian-Ukraine war eventually, got priced in. There's all the events you can look back on. Eventually, the dust will settle and things get back to normal. So it's just a case of just waiting and being patient for that opportunity. Caramel Pineda says UK CPI came in lower, moving closer to the UK target. This makes BOE likely to hold rates rather than cut, since cutting now should leave them with less ammunition in the future. On the other hand, both inflation and the GDP falling, wouldn't rate cut help stimulate the economy? But if inflation continues falling, cutting too soon would risk undershooting the 2% target. So in this context, would the market see lower CPI as good news or bad? It's a tough one, right? Because it's never a black and white situation, right? This is the issue with stagflation, Caramel Pineda. Because if you have, on one hand, you have inflation rising, right? So which is the bigger threat? Yeah, this is the question. Which is the bigger threat? Is it a contracting economy, yeah, where you have lower employment, higher unemployment, yeah, or is it an inflation threat, yeah, where you have rising inflation? And typically, and I have to say typically and emphasize that, yeah, central banks will focus on their currency. Their currency is more important than the economy, yeah. It's the government's job to run the economy, and really the bank's job to really just maintain the value of their currency. Now, so everyone's got different school of thoughts because it's a catch-22 situation. You kind of damned if you do, damned if you don't. Yeah. And this is the reason why sometimes, okay, all right, you can take a trade or you can have a bias, or if things aren't necessarily clear, then just don't take a bias. Do you know what I mean? So yes, there is definitely logic to your reasoning, yeah, in terms of the Bank of England likely to potentially hold, which I can understand that, right? But there are reasons for the central bank to potentially look to cut rates to support the economy, right? So it's a very, very tricky, very delicate situation. So I can't say to you which one is right. Yeah, I cannot say to you which idea is definitely correct. It's just where the market is leaning, and I don't know which way every single market participant is going to lean. Right? Some are going to lean in the holding camp, some are going to lean the other way. But just to clarify, you can see what the market is pricing in if you look at where the cuts are coming. Where you can then start to maybe see a differential or maybe a change in sentiment is if you either get more cuts being priced into the market or priced out from the previous week. Yeah. So if you start to see that green line next week or the next, couple of days or whatever it is, start to, move above or beyond the orange line, then you can start to say, all right, well, they're going to the market on where they're more focused, right? So the market will be more focused on cuts or less cuts, right? Which means if they're focused on less cuts, it means that they're probably focused more on inflation, yeah. And if they're focused on more cuts, then that would mean more that the market is probably more focused on GDP. Yeah. So, but at the moment, they're still focused on cuts. So, if anything, you have to, I would say, take your lead from what the market is doing. If you want to know what the market is thinking and what it's doing, this is why this is so valuable in terms of, you know, uh, looking at interest rates. Because if you understand what interest rates are actually telling you, then you can get an idea actually of what the market is thinking. Like we know what the market is thinking here, right? The market is definitely thinking that the central bank, the Swiss central bank, should be cutting rates more, right? Because they're worried more about the inflation side of things. Yeah. Whereas on the pound, it's not. Yeah. So I hope that kind of clarifies things. Yeah, stagflation is definitely a tricky space for all central banks to be in. Yeah, it's very, very, very tricky. It's not as clear. But you know what is clear? The Bank of Japan, you know what I mean, being really the only central bank, the outlier, right? So it's literally just buy yen and then look to see who is the weaker out of the two, the three, the four, right? Who would you want to, buy or sell I say buy the yen against? Yeah, you're in a New Zealand yen sell. There you go. Do you know what I mean? When it's clear, when Mark says when it is clear, you'll know when it's not. It's always best to stay out. Yeah, or you can take a really small position. Do you know what I mean? Reduce your risk. But yeah, absolutely good, great advice. New Zealand yen, yeah, excellent. We'll look at the New Zealand yen a bit later, right? So, anyways, Swiss yen. Getting back to the Swiss yen, we see downside risks in the second quarter if risk assets remain vulnerable. So they're thinking, obviously, over the next, although they're flat, yeah, 92, 92. Oh, matter of fact, let me just complete this. Let me just read the rest of this. It says here, a fall to in the euro towards 92, below 92 towards 90 cents would certainly be a danger zone, right? And marks the point at which the central bank could enter the market, according to Volkmar Bauer, currency strategist at Commerzbank AG in Frankfurt, and Sasha Kever, chief investment officer at PKB Private Bank SA in Lugano, said it would need to hit 90 to trigger the action. So basically, just to wrap this up, what it's basically saying is on that Euro Swiss trade, right, is that we're already at 92. So they think between 92 and 90, yeah, is the line in the sand. So here is where we are. So if you have a situation where price starts to go into this zone, so 92 is the top of the area and 90 is at the bottom, yeah? So if prices go into this area, this is the intervention zone. This is the zone where you're going to have the Swiss National Bank, yeah? The SNB are likely to start buying the Swiss franc, or actually selling the Swiss franc, intervening, yeah, to make it weaker. Yeah. That's what this is saying. Because they don't want the Swiss franc, yeah, to get more expensive. Remember, they want a devalued Swiss franc. They don't want an expensive one. And if this goes down here, it means that the Swiss franc is likely to continue going higher. And so they're likely to intervene to stop. So imagine knowing that. Imagine knowing that, you're buying, knowing that the central bank is also buying with you. Yeah. Or you're selling the Swiss franc, knowing that the Swiss National Bank is selling. That's it. Go all in. There you go. Go all in. Right. That's what this is telling you. And this is what, not to get sidetracked. This is what price action will never, ever, ever, ever tell you. You can never understand that from price action. Yeah. There's no way you can understand what is going on behind the scenes by looking at price action. It's nonsense to say that, all you need is price action, because you don't have that advantage, right? You don't have the advantage of knowing that there's the biggest entity, on the planet. Yeah. In terms of the Swiss franc and the Swiss National Bank are the ones that are going to be actually helping you and assisting you in your trade if prices go down here and you're looking to buy. You know what I mean? There you go, sponsorship. There you go. Right. So yeah, it's important to keep up to date with the fundamentals, right? And understand what's really going on behind the scenes. Because there are things that you can see and the things that you don't. If you're just trading on what you see, yeah, yes, you can do that. But I would rather also have an edge on the things that I can't see in terms of what's going on behind the scenes. Right. Let's just scroll down a little bit more, couple more pairs, and then we'll just get into the rest of the pairs. So it says here, dollar CAD, keep risk premium on for longer. The direction of the dollar CAD trade relationship